What's up, team? So as we head into week 2 of our options course, we're going to start to discuss, different ways to trade options, different strategies. And while most of what we're going to focus on is what you could call directional trading, where we're just going to simply be breaking down these setups and trading them long or short, there are a different lot of ways that you can take advantage of options. Now, the setup I'm going to share with you guys right here and the trade, the strategy behind this setup isn't something I've really talked with the group a lot about. However, it is something I've been learning a lot from my mentor, who's done this for years. He's been teaching me a lot about this strategy lately, and it's something we're going to focus on with the team, and it's actually a setup in Apple that I'm going to take this trade in tomorrow. So what we have here for Apple, guys, and we already broke it down in that other video, is this really tight squeeze consolidation here on the hourly chart. So depending on which direction the market goes this week, we can expect over the next week, 2 weeks, to see Apple make a sharp move to the upside or the downside out of this consolidation. And again, guys, you could just simply play it long when it breaks to the upside, short when it breaks to the downside. There's also another way to play it, and for this given setup, this is how I'm going to be attacking this. So what I'm going to do on this trade, guys, is referred to as a strangle. And that is when you take advantage of a setup where you buy calls and you also buy puts at the same time. So with Apple here at 170, at some point in the next 2 weeks, I expect it for it to make either a move to the upside or a move to the downside. Now, a move up to 175 or a move down to 165 would be about a 3% move either direction, give or take. That's not really a big move over the course of 2 weeks for a stock like Apple to make. Also, keep in mind the market being at such a critical level right now, we could see a pretty strong break to the upside or, which is probably more likely, a move back to the downside. So a 3% move isn't asking much for Apple here. So what I'm going to do here, guys, tomorrow when the market opens, hopefully Apple continues to stay tight in this range. And I'm going to buy 170 strike calls that expire in a few weeks. And I'm going to buy 165 puts that expire in a few weeks. And the whole thought process behind this, guys, is that one of those trades, the calls or the puts, is going to go to zero. And the other one is going to make a big enough return to not only offset the loss on the other one, but to give me a profitable move on the trade. So, for example, if I buy 165 puts, 175 strike calls, let's say that the market just rolls over. Market completely tanks over the next 2 weeks, and Apple rolls all the way down here and actually makes a move towards 165. Now, obviously, my calls, the 175 strikes I bought, are going to go to zero. So I'm going to put about $4,000 on each side of this trade. So the $4,000 that I put into the calls is going to go to zero. I'm going to eat the $4,000 loss. However, if I'm buying 165 strike puts up here in this consolidation, and we get that breakdown and we make that move down towards that range, those puts are going to make a very big return. Now, based upon what I'm seeing, guys, when you can catch a move, over the course of a week, 2 weeks, 3 weeks, even up to a month, when you can catch a move of that nature, the puts or the calls, whichever side works, based upon what my mentor does, based upon, all the homework, all the studying, all the focus I've been putting into this, on the weekends, you're talking big moves. Facebook was a great example last week where you could have taken this trade at support. Now the calls went to zero, but the puts went from about $1 and change to $6.90. That's about a 400 or 500% return, something like that. That completely offsets the loss on the calls and leaves you with a big ass return on the put side. So that's how I'm going to attack this Apple setup. I'm going to hedge myself here, buy some out of the money calls, some out of the money puts, and I expect an Apple to make a move over the course of the next 2 weeks in either direction. And I'll take the loss on one side, but based upon what I'm seeing, guys, and what I'm testing out here, is that the other side should make a big enough move to not only offset the loss, but to leave me with a nice profitable gain. So here's how this is going to work. I'm looking at the options that expire on March 11th. That gives me all of this week and all of next week. I'm thinking about either these or March 25th. But for the sake of this video, guys, let's say I do the 11-day expirations. Tomorrow there'll be 10-day expirations. I'm going to come in here and I'm going to buy about 40 or 50. Unfortunately, it's a big position, a lot of contracts, but I'm going to buy about 40 or 50 of the 165 puts. So that's going to have me putting about $4,500 on the put side. For the calls, I'm going to come in here and I'm going to grab those 175 strike calls. Going to probably grab about 40 of those, 45 of those. Yeah, so I'll grab about 45 of those, and that's going to put me at about $4,500 on the call side. And again, guys, I'm not really betting on either direction here. More so what I'm betting on is Apple just making a move. I could care less which direction the trade goes from here. I just needed to make a move in one direction. Now, the ideal situation would be that it goes to the downside because the implied volatility will rocket on the puts, and I'm going to get an even bigger return on my hands. That's the kind of situation where you can be looking at a 500 or 1,000% return. So, let's daydream here, guys. If this is the kind of trade that could potentially lead to a 500% return, 1,000% return. These are the kinds of things I've been seeing. They're the kinds of things my mentor's done for, years now. I lose 4,000 on one side, I make 20, 30, 40 grand on the other side. Obviously that's probably not what's going to happen here, but nonetheless, guys, when you can position yourself in a trade like this, especially with the market being at a critical level where we could see a big move either direction, it gives me a good chance here to see Apple make a move. Whether it's to the upside, the downside, I don't care. The whole thing I need to happen here is for Apple to just make a move. So with Apple being in a consolidation, that typically leads to a big move to either direction. You couple that with the fact that the market is at those key levels where we could see a move to the upside or a strong reversal, and take into consideration the monthly charts we looked at earlier, where the moving averages are still pointing to the downside despite this 2-month bounce we've seen. I like the chances of Apple making a move here. So this is an example of the kinds of different setups, different strategies with options that we're going to be covering, guys. But in terms of what I'm looking at this week, that's a trade that I'll be putting on tomorrow morning. And of course, I'll keep you guys updated along the way.